Good morning, everyone, and welcome to the first Financial Services HR and Compliance event of the year. I'm Zoe Avenel, I chair the network, and I'm also Head of Marketing and Events at our co-sponsor, Varan Performance. I hope you're all keeping well and managed to avoid injury following a bit of snowfall this weekend. I've heard a few of bruised elbows and knees, so I hope you've managed to avoid that. I'm sure by now you're all very familiar with webinar platforms, but just so that you get the most out of this session, can you please familiarise yourself with the chat and the Q&A buttons? It's the best way to interact with me and also interact with our panellists that we have here today. So we really encourage you to use those at the bottom. It's wonderful to see so many familiar names on the call, and also welcome to the newcomers. Each time we always have new members joining us for each event. And so with that in mind, I thought I'd just give a little bit of a background about the network, which was founded in 2012 by Varan Performance, a leading HR and finance technology transformation consultancy, and Kemp Little, a law firm specialising in technology and rated as one of the leading financial and fintech practices in the UK. The two firms noticed two key gaps in the financial services companies that they were working with at the time. The first, a division between HR and compliance teams, and the second, a lack of industry collaboration when grappling with regulatory demands that are published by the FCA and the PRA. And with each event, we always have three key objectives, one being to understand the impact that new and changing legislation has on our businesses, on financial businesses. The second, to allow the opportunity for you, our industry peers, to collaborate and share best practice. So being in a room, chatting, understanding how people are interpreting the regulation. And thirdly, to promote a consistent approach to regulatory challenges across the industry as a whole. We are a not-for-profit organisation and we host free breakfast seminars, usually January, March and April, and then September and November, although these are now taking place online. We have about 4,000 members, individual members, all HR and compliance professionals at all levels, and that they represent about 1,000 regulated businesses across the country. So quite a large network, one of the biggest, I believe, in this area. So if you do have any questions about the network, don't hesitate to contact me after the webinar. So moving on to the agenda for this morning, we are going to dive straight in to a live panel session with David Williams, Lucy Sorrell, Tom Holmes, Amanda Collins and Jacob Ganti, covering the impact of COVID, Brexit on our regulated businesses and what is in store for us this year. It's an opportunity for you to ask the panel lots of questions, really get involved and ask questions that would help you in your role as HR and compliance leaders. So we'll try to incorporate those as we go along. I've asked the panelists to make a note of any questions as they see them. And then we're aiming to round up just before 11. And if you miss anything, we're going to record the session, so we'll share it afterwards. So David and panelists, I ask when appropriate, but David, over to you.
Thank you very much, Zoe. So let's set the scene for today's session. Let's start with Brexit. So financial services accounts for 10% of the nation's tax receipt, of which 40% is exported to the EU. And despite that, only 4.5 pages of the EU-UK Trade and Cooperation Agreement was focused on financial services. And with that, there was no agreement for a precise substitute for passporting, which many people had been hoping for, perhaps unrealistically. So that's definitely something we're going to focus on today. But aside from Brexit, we still have the challenges that the financial services sector is facing, the implications of a third lockdown and the changes to working arrangements that have arisen as a result of that or have continued as a result of that. And of course, the deep and challenging impact on the economy, which most businesses are grappling with. So there is plenty to talk about over the next hour or so. And as part of that, I am delighted to be accompanied by a fantastic panel today. So starting off in the order that they will speak. So I'm going to start off with Jacob Ganti, who is a regulatory partner, in fact, heads up the FS regulatory team at Kemp Little. Lucy Sorrell, who is a senior associate at Kemp Little, who specialises in employment and compliance, regulatory compliance aspects. Amanda Collins, who is the head of corporate governance and accountability at Kleinwatt Hambros. And finally, Tom Holmes, who is the founding partner of Brand Performance, or one of the founding partners. So it's a great panel, lots to talk about. Please, as Zoe mentioned, if you have any questions, put them in the chat or Q&A function, and we'll try and raise those. Lucy's going to help me do that during the course of today's session. So without further ado, Jacob, let's start with you. So do you want to just give us an update on where things stand for UK businesses who want to do business with customers in the EU?
Yeah, sure. Thanks, David. Well, as we all know, the transition period ended at 11 p.m. on the 31st December 2020, and as you just laid out there, David, the UK left really without an agreement specifically relating to financial services, so quite a big gap in that free trade deal. Although there are discussions between the UK and the EU regarding financial services, let's be clear that the UK government is not seeking to be a member of the single market going forward. So if there's ever any suggestion of talking about, well, will we get passporting back, for example? Well, the answer to that is no, because that is a sort of feature of single market membership. So the only way the UK financial services industry can maintain its pre-Brexit access to the EU is if Brussels grants regulatory equivalence. And so what's equivalence? We've heard about it, but it's a classification that will only be given if Brussels deems that the UK will stay roughly within the EU's regulatory orbit for financial services laws. So equivalence is a mechanism for financial institutions based outside of the EEA, so-called third countries, to provide services within the EEA, provided the EU deems their regulatory protections roughly equivalent. There are some gaps within this concept of equivalence, of course, because not all of the financial services regimes, directives, and so on are under it within EU law provide for equivalence. So, for instance, the Markets in Financial Instruments Directive does, but I think I'm right in saying the Payment Services Directives don't. So there are some sort of a lot of legal wrinkles to all this. So that's where I think we are on equivalence. It's still under discussion. So where does that leave firms with who need to deal with customers in the EU? Well, in the short term, meanwhile, whilst the EU and UK discuss an arrangement around financial services, UK firms are having to really negotiate a patchwork of individual EU nations' regulations. Unless firms have an appropriately authorised entity within the EU that can do business with local customers and which can passport in place of the UK firm, they either have to cease doing business within the EU or with those customers, or look for alternatives like partnering with a local firm that holds a licence whilst they try and obtain their own.
So thanks, Jacob. You know, we talked about people wanting to sell services into the EU. Have we done anything to make it easier the other way around for EU businesses to work in the UK?
Yeah, absolutely. So there's the Treasury basically created what's called the temporary permissions regime, which allowed, in a nutshell, EU firms that held passports into the UK so that they could do business either on a branch or cross-border basis with UK customers could notify the FCA that they wish to continue to do so. And it's called a temporary permissions regime because it's predicated on the basis that it gives those kind of firms a soft landing in which to apply for a UK license. So they have they're given a temporary license and a period of up to about 3 years to apply for their own local license. Anecdotally, some of the firms that we've been acting for, so foreign firms, EU firms, who had been considering using that regime, so some of them haven't bothered, because one of the features of that regime is that you're deemed essentially for a fixed period to be a UK firm, and that means you're subject to greater regulatory requirements in the UK than under passporting. So you have to comply just as a UK firm would with local UK regulations, including paying FCA fees. There's another feature to what the Treasury have done, and that's the financial services contracts regime, and that's a mechanism for EEA firms that choose not to operate within the temporary permissions regime to run off existing contracts and conduct an orderly exit.
So where does that leave us for the future? What about the future? What developments do you think are going to take place now so businesses remain competitive?
Right now, I mean, there are two ways of looking at this really, but right now, there's this concept of onshoring. So basically, the government decided to write EU laws into the UK legislative statute book. Think of and that was called onshoring. So that we'll think of onshoring as a convenient means of maintaining regulation broadly as it is, incorporating EU laws, rather than the government having to, over the course of the past 12 months or however long, having to draft thousands of new laws. That's right now, but things are going to change. It's really clear. The government has published a couple of consultations on the future regulatory framework in the UK. And I mean, there are a load of interesting things in there, but it could mean that our legislation starts to look different. We know how it worked until very recently was generally in financial services laws, there's an EU directive and it gets implemented into local law by local law in the member states. That leaves a gap in the UK framework. We no longer have that framework directive at the top. So one of the proposals from the government is that's under consultation is should there be a new type of framework legislation within our legislative framework. So things could change, and also that at a more detailed level, the Treasury is, for instance, carrying out a wide-ranging calls for evidence and so on in relation to different parts of the financial services industry. For example, it's conducting its payments landscape review. So I think it's a question of watch this space. Things are going to change.
Okay. Well, we'll definitely watch this space. Lucy, let me bring you in now. Brexit and COVID, they've been sort of huge distractions for everyone. Are there any other deadlines that people should be thinking about?
Yes, well, the main one which springs to mind is the extension of the deadline to certify regulated firm certified staff under SMCR, implement the conduct rules and submit directory information. And this deadline was previously in December 2020, and it has been moved back to the end of March 2021. Just a couple of observations to make about that deadline, which I think are quite interesting in the light of the various pressures that have been placed on firms in light of COVID and Brexit. So the FCA has made very clear that this extension is not an excuse to prevaricate. So I think perhaps when the news first came out, everyone breathed a sigh of relief. They had so much else going on that they wanted to just park that process. But the FCA have made very clear that that is not the way that it should be viewed. The extension is very much there to ensure that there's no compromise on quality. They didn't want firms to choose between dealing with COVID and implementing SMCR, and they wanted firms to deal with both of those to a high standard. It also made clear that if firms were in a position to implement these various changes in advance of the 31st of March deadline, they should do so. And so if they had, got ahead of the game and already trained staff on the conduct rules, they should carry on, treating staff as such. Anecdotally, I had a client recently that was a bit of a victim of its own success. So it had been really organised, it trained all of its staff on the conduct rules. It then had a disciplinary, which required consideration of the conduct rules and put them in a bit of a tricky position, and said, oh, can we get out of considering the conduct rules? It doesn't come until the 31st of March. And the response was, well, no, you've trained all of your staff on the conduct rules now, you can't go backwards. So obviously they had to kind of carry on down that path. And the FCA would, expect that when you're in a position to adopt these rules that you that you do so. And I think that that is very much consistent with the stance that the FCA has taken in relation to COVID. So we have, for example, the speech by Julia Hoggett saying that the FCA expects the same standards in relation to monitoring and surveillance from staff who are home working to staff who are in the office. And I think this fits very much in with that.
So, Lucy, I think the extension was announced a while ago, and in some ways things haven't changed. Mm-hmm. So in our third lockdown, do you think we're going to have another extension? Possible? So
if you look at the FCA policy statements on this, they're pretty clear that there won't, to date, they've been pretty clear that there won't be another extension. And you're absolutely right. I mean, in some ways we're in a worse position now, some would say, because lots of us thought that the worst of the pandemic would be behind us at this point. Obviously, it's very unpredictable, but it's now looking not so much like that. So you might think that there would be further flexibility announced, but there hasn't been any sign of that. And certainly when it was initially announced, the FCA said that the majority of firms that we've spoken to are quite a good way down the line already. They were working towards this 9th of December 2020 deadline, and as such, they're kind of ready to implement now. They will be very soon. They'll perhaps be delayed by a couple of months. So I think it seems unlikely to me.
I mean, do you think the extension gives the impression that SMCR is low priority? I think I saw there was 34 conduct-related investigations by the FCA in 4 years, or 4.5 years.
Yeah. So I remember when this.
They're taking much of an interest.
Yeah, I remember when this news came out, and we took it very much with a pinch of salt, because, of course, I think that was in November of last year. And I guess at first blush, 34 investigations in 4.5 years of SMCR doesn't look like that many. But this was investigations by the FCA. By that point, the deadline for full implementation by solo regulated firms had not yet hit. It was going to be in December. Now, of course, it's the deadline for a lot of the tasks is now at the end of March. So the FCA will be biding its time in relation to a lot of solo regulated firms to do much in terms of investigation and enforcement action. And in the first wave of firms who were for which SMCR has been implemented, the majority of those would have been dual regulated, so by the PRA and the FCA. And what we would expect is that the PRA would have taken the lead on enforcement action in the earlier days of SMCR. So in fact, that number of investigations by the FCA doesn't give a complete picture. It doesn't tell us how much enforcement action there has been on the part of the PRA. So yeah, big pinch of salt there.
Well, that's reassuring to hear, I have to say. So Amanda, if I could bring you in here, do you want to just share some of your observations and experiences that you've encountered over the last 6 months or so with Brexit and lockdown?
Yes, absolutely. I guess, I mean, we are, as a private bank, we are the private banking arm of Société Générale. And so we are dual regulated. So we have been in the regime for some time. I guess from a Brexit perspective, we have had the benefit of a large, global corporate. So as a private bank, our team has worked with the parent company to be Brexit ready as much as we can. We have lost clients, we've had to reconsider where we can provide those services. So we have had some reduction around, some of our sort of global clients or European clients. We have used some of the temporary permissions to keep sort of business going where possible. But yeah, we have been impacted and we expected to be impacted. We've had to do a lot in terms of training staff around cross-border sort of activity. And one of the particular challenges for us, which actually is sort of goes slightly against the grain of sort of COVID challenges, is that, of course, we have offices not just in the UK, but in the Channel Islands, but also in Gibraltar. And of course, because of the loss of passporting rights, Gibraltar's, for anybody that knows it, it's a tiny place. So a lot of our staff actually reside in Spain. And of course, the messaging therefore had to be, well, whilst we're actually encouraging everybody or telling people, do not come to the office, you must all work from home. Of course, in the situation in Gibraltar, the moment, the Brexit deadline sort of passed, actually our staff needed to be in the Gibraltar office more than not, because of course, it could be considered that they were providing services in Spain, and therefore we could have been subject to double taxation. So it sort of goes against, obviously, everybody's absolutely mindful of the COVID, keeping people safe, keeping people healthy and so on. But it is a consideration now around, how do you manage, your staff, as I say, when they are in a jurisdiction that they don't automatically, sort of work in. And that may be quite unique, maybe to a firm like us, but it is something to be mindful of. As I say, when, and I spent near on a year working in Gibraltar myself, and I remember, having to go through kind of the whole double taxation thing myself. So it is, it's a bit of a minefield, but it does put a different spin on, particularly, as I say, when you're managing the COVID kind of, requirements.
It's interesting. We're seeing quite a lot of that at the moment. We're seeing, people working, clients saying, staff can work remotely, and then someone says, well, can actually, I'm from Bulgaria or wherever it happens to be, can I go and work there? And people are then saying, well, what does that mean for the tax for you and for the company? And what data, and how do we safeguard confidential information? And actually, should we be paying you a London wage when you've gone to somewhere that's more expensive or cheaper around the world? And how are we going to do it? Have you, aside from Gibraltar, have you been thinking along those lines in respect of your sort of business?
Yeah, there was certainly, we were always, I think, arguably in terms of cross-border sort of activity, that was always something as part of our sort of strategic, our commercial strategic sort of vision and view anyway. You're forever looking at your risk appetite in terms of, high-risk clients, for instance, and so on. And often, sometimes they do come from various jurisdictions that you rethink. So I think for us, it was always sort of already on the radar. But yes, again, I'm not directly involved in the decisions around sort of pay and rations, but certainly there is a feeling that actually the fact is that the role of the office environment will be different. We've already reduced our footprint in London, and people are concerned that means that pay and rations will be impacted, because arguably if everybody is working from home, and the likelihood is that the norm will never be to go back into expenses offices 5 days a week, then the fact that we're all saving money by being at home, does that mean that should be reflected? If you think about the days of, certainly in sort of, civil service of sort of London waiting, payments, that sort of thing, will that have an impact in terms of how, as I say, the pay and compensation, for people, because their environment is different.
It's interesting you mentioned changing the footprint, because we've been talking to lots of sort of clients and partners about this, and a lot of them are thinking of reducing their space, but also possibly changing what it looks like in the future. Has your business given any thought to that?
Definitely. As I say, we've already made that change in terms of, we all know London space particularly is very expensive. And I think it's actually starting to resonate with sort of companies and firms to say, but what is the role of the office going forward? Because arguably what COVID has done is force people to think about their contingency planning, their resilience, and arguably from a technology perspective, we probably all had the challenges, whether it's Zoom or Skype or whatever, people having the right kit at home. But now, given where we are, most businesses will be much more stabilized. So they question what the role of the office will be. Is it more a social hub going forward rather than a place, you know, to have bums on seats? That then does, of course, create a kind of need for revisiting culture, because arguably what you then have to do is look at maybe a trust-based culture, because suddenly everybody is pretty much self-managing, you know, in a remote environment. But there are benefits to that, without a doubt. So I don't think, you know, that it's going to change completely. I think that footprint is still there, and there is an absolute social need to bring people together, but probably more in terms of social hub by way of team meetings and that sort of thing from time to time, people checking in, rather than from a kind of a management of your resources perspective.
It's really interesting. My own observations on this is a lot of people are rebelling in some ways about the thought of going back to the office, because, you know, in the old days you had a big office and lots of space, and then it got smaller, and then it was open plan, and then open plan got smaller, and then you got this tiny desk in it, and then you just had to check in, you know. And a lot of people, when they look back at that, say, well, actually we were just saving money. It wasn't particularly pleasant. And at the same time, the trains were, you know, certainly my train, you know, it's a long distance commute, but they were taking the seats out, so when it went through London they could pack, you know, thousands of people in, and you kind of think, you know, actually the thought of that for a lot of people in terms of going back to it is appealing, albeit on the other side of it, I miss the social aspect of being with my team. I have to say, yeah, a lot of fun, and that's missing from my day, and the days seem much longer when we have just I don't about the news and other things. I think
absolutely. I don't disagree, David. And I think, you know, if I look at Société Générale as our parent company, I mean, we were in the middle of, you know, doing a deal on a very swanky, very expensive building in Canary Wharf, and we moved into that, you know, and people did wonder with Brexit, were we still going to go ahead? And yes, we did. You know, and it's a very nice building, but yes, I think its need now, its focus will be different, because, as I say, we have then sort of reduced other property, you know, in London that we have. But I do think we also have to be mindful, again, thinking about culture and of, you know, one of the good things is that actually the virtual world has forced particularly managers and senior managers to really connect with their staff, and they've probably got a much better insight to the circumstances of those staff in terms of the holistic life work style balance, you know, for the people that are working and trying to educate kids at home, but also the economic sort of side of things. You know, I have to sort of take my hat off to my company, because they have made their business to ensure that people have got as much a decent sort of setup at home, you know. But in the early days, people were sat at the kitchen table on a wooden chair, you know, on a laptop. Wasn't the greatest kind of, you know, working environment. So we've done as much as we can to kind of support staff, but, you know, we're not all, you know, not everybody is lucky enough to have a swanky sort of home office, you know, with all sort of, you know, all singing and dancing sort of movable chairs and up and down desks and things like that. But I think, as I say, what it has done is allowed management to consider those, you know, the impact on individuals. And actually what we are seeing is allowing people to have far much more flexibility, both in the working day, in how they adapt their performance and deliverables and objectives. But of course, the downside of that is then how are you sort of managing to make sure that people are still on track and still delivering in the way that you need them to do. And as I say, I wrap that up into a creation of a trust-based culture. And arguably people will say, but surely that should be there anyway. And yes, it is. But there is a difference between being able to, you know, I'll give you a sort of real scenario. You know, we're still trying to, you know, finish off kind of year end, you know, fit and proper sort of forms and conduct forms, attestations and so on. Now, it would have been easy in the old world to sort of pretty much walk around the office and perhaps tap someone on the shoulder and give them a, you know, a sort of a nod to say, look, can you get this done? where of course now it's all done virtually, and email traffic and phone calls and all of that. So there are some challenges, but I actually think there are some benefits. Technology has moved on. We have demonstrated that we are able to actually get things done in terms of technology transformation much more quicker than anybody probably ever thought. So arguably, there is some good coming out of this.
Do you think you become more productive because of this?
Absolutely.
This is a period of change. Is it good change, or is it just a reactive change?
I think it's good change. You know, from a banking sector perspective, reputation of banking is probably better than it was pre-pandemic. And the reason I say that, and I've had this debate with sort of colleagues, is because actually, the banks who perhaps had a bad reputation, particularly for customer service, have had to step up and demonstrate that actually they are supportive of people in kind of economic crisis situations because of, losing jobs and so on. Now, of course, the question is, can they keep doing that, post-pandemic and all of the measures and sort of, support that's been put in place, what does that look like sort of, in sort of years to come? But yes, I think it's about productivity from the work within the workplace means that actually people have to be trusted to self-manage. But the business and the senior management still has to keep an eye on things, because actually I know, I was always an early starter, but it's very easy for us to all sort of say, well, actually, I'll switch my machine on early because actually that would have been the time I was commuting. I'm no longer doing that, but I'll still log on, get an early start. But there is a danger, because you're not having to commute, you're not moving from workplace to home, that actually that computer is still on through the sort of small hours. And do you actually ever switch off? So again, having to do quite a lot in terms of the focus around mental health, the connection with people to make sure they're okay, but not losing sight that people need to deliver.
It's really interesting, because I think when you're at home, you're under tremendous pressure. I mean, I see it with my own team that some people are looking after children, so they kind of stop work early evening and then maybe log on a bit later. And the trouble is, you're getting emails from people who might only be working 8 hours a day, but are doing an hour or two at 10 o'clock at night, if you see what I mean.
Yeah.
I kind of feel that, should I respond to that? And you feel under tremendous pressure, or should I just ignore it and do it when I'm working? And I still think to find a pathway to dealing with that, because you've let people down by not coming back to them.
Interesting you say that, because one of the things that we have encouraged staff to do who are in that particular situation is to just put a message on there. So actually to put the kind of out of office on, but actually to put a message which is along the lines of saying, due to my kind of, personal circumstances, I'm working more flexible hours, but don't feel obliged, to send an email back because I happen to be sending something at sort of, 10 o'clock at night. There's some good wording that colleagues have come up with that sort of is kind of letting people know, yeah, I'm working slightly differently from you, but just because I am sending that email at 10 o'clock, I'm not sitting here waiting for the response. Those little tips I think are actually very useful.
Yeah, I think that's an excellent tip. I'm going to bring Tom in just one moment, Tom, but before I do, one final question, Amanda, just at this stage, we'll bring you back in again. You mentioned resilience and regulatory resilience, and something you have to focus on in the context of SMCR. I mean, have you looked at the SMCR arrangement and adjusted it? Have you been thinking about anything to do with delegation or anything of that nature?
Yeah, absolutely. I'm responsible for SMCR sort of for Climate Watt Hambros, and I think we always were mindful of, what did resilience mean? We know that the focus in terms of resilience by the regulators is far more now than just pure sort of financial resilience. And from that perspective, I think COVID, particularly in terms of, with the first wave, it made us think about delegation, because actually what I started to come across is, whilst obviously, you set out in the regime your prescribed responsibilities, your key function responsibilities, major projects and so on, but there were other things that were starting to sort of fall between the cracks. And arguably people were sort of, particularly senior managers looking at each other saying, well, yeah, we know that we need a focus on that, but it's not written within my statement of responsibilities. And actually, when I revisit my job description, is it explicit? Now, there'll be always some things that are inherent with certain roles, but I think it did make us think. And it also meant, from a resilience perspective, in the event of somebody actually being hit by COVID, were we in good state of delegation? And many senior managers with those holding those SMF functions will have delegation plans, but how well documented are they? How well are people aware that they are the go-to person in the event that somebody is actually unavailable? And that's quite different from succession planning. So we did more work on that and actually revamped and strengthened our own delegation framework as a document, as a go-to document, that in the event something happens, you know, there are other people can kind of really be parachuted in and be clear about the expectations on them.
Fantastic. It was almost as if the pandemic was designed just to stress test SMCR and regulatory systems. So without further ado, I'm going to hand over to Tom. So Tom, do you want to just tell me about your observations on Brexit and COVID? What's the world looking like when you're talking to lots of HR directors? What are you learning and seeing?
So I've been broadcasting with HRDs of global companies every 2 weeks from the beginning of the COVID crisis. I think we've done 25 of those sessions from the very start of the COVID crisis right up to now. And we've noticed some significant changes since the new year, which I wanted to reflect on. So in my conversations with HRDs, they are seeing a new change, which is problematic and maybe an acceleration of what we've seen before. I mean, you know, we've touched upon the increased demand of activities. So, you know, Jake told us about this patchwork of new regulations, which may or may not be becoming, and you know, ill-defined. Lucy's talked about the need has not reduced to drive regulatory quality. There may be a small delay in time, etc., but the actual quality and the activity is the same. And then Amanda's reflected on some of the capacity questions, but our HRDs are talking about a significant issue about capacity of staff and the ability of the business to balance that workload. So the capacity of staff this year is that they are seeing that team members are increasingly working longer hours, working the weekend, etc., and really not able to get through the quantity of individual little bits of work, etc., which they are having to deal with. All these incremental increases have led to a very long hours working among many of our colleagues. And yet that's compounded by our ability to manage this. So Amanda discussed the fact that in our office environments, we're very good at load balancing. We're very good at seeing that somebody has not done something and going and tapping them on the shoulder and all this kind of stuff. That ability is reduced. So our ability to respond to these demands and change the way our teams are formulated and working is much reduced, as well as the demand for it to occur. And so the big trend I'm seeing this year is about something which many people are calling interoperability, which is the ability of understanding our teams, understanding how we move and reshape our teams to meet what are often unclear demands, etc., in an environment where we can't see our teams in the same way we did before. And it all sounds really kind of quite airy-fairy, but I think it's very specific and becoming very hard this year as we've gone into January and are now moving into February. And it's looking like the conditions and the way we're working is going to continue for a lot longer, and even for a very long period. And so what we're working on with our HRDs is actually how to drive new ways of managing workload across teams, managing workload across multiple teams and moving it around, monitoring the amount of work which is being done, and then rebalancing that. And we're having to, and our clients are having to, invent ways to achieve this, because the old ways we were using pre-COVID can't be done without physical environments we're used to. The emergency ways which we developed during the COVID crisis in the first few months are now wearing thin. And now we need to create methods, and some of them technology related, others not, to be able to have insight into what our teams are doing and support them properly in moving work from one place to the next. Not helped by as Jake pointed out, that patchwork of different stuff, with it being very unclear as to exactly what that workload is going to be from one day to the next, let alone 1 week or 1 month to the next. So, David, that's what we're really seeing in the market at the moment, a real change actually since Christmas, whether that's purely Brexit related or whether that's also related to the incremental wearing down of capacity over the last 9 months. I'm not sure.
When you talk about change, are people changing their business models? Are they changing how they operate? Is it a mixed bag? What's the main focus of the change at the moment that you're seeing?
We need to look into the way we used to manage our work. So it was clear in a physical environment where one team was overloaded and one team had more capacity than they needed, and it was easier to rebalance that in a physical way. Our whole work environments were set up over a 50-year, 100-year period to achieve exactly this. Suddenly we've been divorced from those, and so now achieving that level of insight, how busy is this person, what are they doing, are they getting through the quality required by the work they're doing, are they working too hard or not hard enough, etc. And can I redeploy resource elsewhere to that area? And and you mentioned, Amanda, the civil service earlier. I mean, the civil service top agenda item is interoperability across their 500,000 staff for this year. There's and for them, like for all of us, the changes of demands on what they are doing and what they need to deliver are daily, weekly and monthly, and changes which previously might have taken 5 years to do, they got 5 days to do. So who knew you're going to set up a whole vaccination on a massive scale exercise? We kind of knew, but we were thinking about other things. And I think my point is, and my message is, that this is cross-industry. This is core to the success of financial services, and indeed any of our business, which are driving services to our clients and responding to our client needs. And we really need to look again at how we manage in this distant, separated manner. I think it's it is exciting. There are things being put in place by companies which we can learn from, but it's a tough challenge, particularly in the dog days of January.
Absolutely. So, I mean, one thing that has been a focus actually pre-COVID, in fact, even whilst we were talking about Brexit, is productivity in this country, and we're not as, doing as much as we should be. This is an opportunity for businesses to look at, what people are doing and how they're doing it, and trying to make it much more efficient and deliver. Do you think the government can do more to support this? I mean, obviously hasn't got bags of money, and but it seems, if it can improve productivity, and that's maybe a legacy of these challenging times, then that wouldn't be all bad. But do you think they can do anything to help businesses do that? I
mean, the traditional manner in which governments, and particularly UK governments, have dealt with this is by pushing on a reduction on red tape and related activities. Problematic in the new environment caused by Brexit, which appears to be having a reverse push. But what we're seeing on a day-by-day basis, papers, etc., certainly from the physical goods side, is a real demand for the reduction in red tape. On the service side, it's less clear, because it's not clear exactly what those targets are yet. I've referred 3 times to the patchwork of new regulations, new things which Jake talked about, but that's really true. It is a patchwork picture. We can only see parts of it and not all of it. That is the traditional method, and it seems hard to see how that particular method can be dealt with. How we've got to respond to that, I think, is by driving efficiency of our processes and automating them as best we can in a far more rapid manner. So, what Amanda needs if she needs to go and tap people on the shoulder, is a mini little thing which does that tap automatically without Amanda having to phone up and have a 20-minute Zoom with each of those people just to do a tap on their shoulder. It's these mini interventions and creating the way, the construct of the way we worked has been about mini interventions, physical interventions, going and saying, don't do that, try this, that kind of conversation in the office. We have tools which are great at driving big pieces of work from here to there. What we don't have are tools which so well deal with the mini interventions, the mini interactions, and the mini reminders, which we all, which as humans, we all thrive on.
Do you think those tools are coming? I mean, it's interesting you say that, because I look at Zoom and Teams, they're kind of brutal, and that in some ways they're really useful. I don't have to walk to a meeting, but they slow me down in that I'm stuck on this when I could be doing something else, and it's finding a more efficient way. I mean, the other thing, I mean, anecdotally, I don't know about anyone else, but I've never seen so many emails coming in. It seems my email traffic must be up like 20% that it was before COVID, and I'm struggling, my computer is just struggling to deal with the whole thing. So it's
absolutely. I mean, we're working on many channels, on more channels. So people are working on Slack, WhatsApp, all these kind of things. Even TikTok is used occasionally. Now, obviously, that creates regulatory questions, which need, for the actual material we're working on. But these kind of conversations tend not to be about regulatory controlled conversations.
Yeah.
But yes, that kind of combination of different technology, but none of that gets away from the fact that it's all screen based. It's kind of, and for many of us, David, you and I are probably more in this group than others, having Zoom and then having TikTok, having WhatsApp, and then having Slack all running at the same time is possibly not our favorite thing. We've seen it in our families, and my daughters are great at that, but I'm less good at that.
Yeah.
But I think that is so the answer to your question in a simple basis is not really. And I think that the answer to this relates to Amanda's point about increased self-management, and how we turn that increased self-management to not work solely around our own workload, but around our team's workload. So we used to do command and control. Now we're managing our own workload, but how do we spread that across others? Amanda, I'd like.
Tom, do you think, can I just ask, do you think that in itself then, if we go down and, as I say, I relate to reference the kind of, the trust-based culture, if we can get there and do that, do you think that actually then could flatten hierarchy within organisations? Because you've got the challenge of kind of virtual management, but actually some of that management could look very different. And do you actually need, managers of managers and so on?
I mean, the reality is, you've already flattened it, Amanda. Self-management in itself is in itself taking that management layer and pushing it down to a lower level. We've relied on our teams to set up their own offices, set up their own working environments, manage their own days in ways in which we didn't use to. All our business environments were command and control type environments in the past. And so it's a reality that there's a flatter management structure, but how to make that work better, because these people are not trained at cross-managing across themselves and others in that kind of collaborative manner. In fact, nobody is, or very few people are. There's very few, apart from if we look at the creative industries and industries in that nature where that management has happened. And I'm very interested in one aspect, which is from the technology industry, agile working and the techniques of agile working, which I know we've all been bored with for years and years. There's some really interesting lessons in that to apply to our organizations. So the idea of a morning scrum in which today's work is discussed, not tomorrow's, not next week's, not our role in the organization, but what we've got to get done in the next day and the next 2 weeks. That's very interesting. We're seeing that across industries, that's how they're working. You know, and I think that is there is an aspect of creating and embracing that kind of self-management, that team management, that collaborative way of working, the short-term goal way of working, which I think is part of the answer, Amanda. But you know better than I do, because you're in control of a pretty substantial team over there. So, you know, you tell me how it's going.
Amanda, have you changed how you manage your team in terms of, we just discussed Scrums, and we do it with my team. We meet every morning, and it's partly to check everyone's okay. So there's a human side to it. Actually, I'm happy for people to talk about what they watched on TV.
Yeah.
We just want to make sure everyone's okay, and we're committed, and we're going forward. I can find out who's working hard. It's an interesting, you know, we didn't necessarily do it, but, you know, back to the point of, I suppose, we would talk during the day, and we missed that, so we have to do it in a sort of...
you've definitely, you know, we've definitely missed the sort of, you know, the coffee machine kind of, you know, catch up, that sort of thing, you know, passing people, or, you know, passing the time of day with people in the lift, or, you know, as you walk through a corridor. So you have to replace it with something. What we've tried to do within our team is, you know, check in with everybody, sort of, you know, having that weekly meeting. And what we've actually started to do is sort of alternate. So every other week we focus actually on a kind of a particular sort of area of subject matter expertise, you know, either bringing somebody from another function in to do some sort of, you know, virtual training with us, something to kind of, so we get the connection, we get the social bit, we talk about, you know, how everybody is, but actually try and sort of mix it up a bit, so people don't feel, oh yeah, here we go, Monday morning, it's another forced sort of session just that I've got to kind of engage in, because the downside of that is, particularly if you've not got cameras on, is, you know, and I see it all the time, obviously in corporate governance, you know, big board meetings and so on, even when we were literally in a room, you know, people are always distracted by emails, you know, Blackberries, you know, looking at something else, you know, they're trying to, and you know, unfortunately, I've reached that age that I do not multitask anymore. I certainly don't do it very well. So I have to focus on the one thing, but there's lots of people that will be trying to kind of multitask and engage. And therefore you argue, well, how engaged were you during that time? If you're busy looking at, as you say, the sort of, you know, the 300 emails that have come in that morning. So it's a different management challenge in terms of communication, certainly.
Brilliant. And just in terms of some of the questions, so we've got a question from Elizabeth that's come in on immigration. And Elizabeth, we probably will take that offline because it's a sort of technical thing, and we'll come back to you on that. Becky's got some great comments there, so everyone can read those. David, maybe this is one for you, Lucy. So how do companies manage culture with remote working and able to demonstrate how regulators' expectations are maintained? Have you got it? Maybe just a couple of minutes of thoughts on that before we wrap up.
Yeah, of course. So this is something we've given quite a lot of thought to. COVID first hit and the move to remote working first happened. And one of the clear challenges that comes with remote working is that it's much harder to have kind of performance metrics which are based on behaviours, so the sort of softer ways of behaving with people, which can't really be observed in a remote working environment. And that's quite tricky because obviously the FCA has put so much emphasis on culture, and culture is really shaped by the way that people behave, and it's really difficult to know how people are behaving if you're not in the office and you're not able to observe them, which then becomes a question about, you know, how do I certify someone is fit and proper if I'm not able to observe their behaviours? How am I able to assess that they're competent to carry out their senior management function if you know, I'm not able to observe them? So I think we really need to think about how we can create deliverables which are based on not just behaviours, but things which are measurable, kind of on paper. So, for example, I think the daily check-ins are really important. That's something that can be evidenced. I think any other behaviour metric that's sort of evidenced in writing is going to become more important here. And one of the biggest challenges with SMCR as well is evidencing compliance. A lot of people felt at the beginning that actually SMCR shouldn't change anything because it was simply a set of standards that should apply anyway. And the challenge was just kind of making sure that you were able to document this and evidence this. And in a sense, remote working just encourages us to do that more, because we're not in the office, we can't be observed, and therefore that creates a bigger push on us to create that paper trail. I think another challenge that I've seen, particularly with some of my clients, is maintaining clear expectations about staff behaviour. So I've observed standards slipping and people not complying with policies in the same way that they would when they're working from home. So I think there's a bit of a sense of out of sight, out of mind. If I breach this policy, no one's going to see, and therefore, that's fine. And I think firms need to think about how they're going to monitor compliance so they can pick up those kind of instances, but also be very clear about setting expectations on their staff and making clear that those high standards still apply, these policies are still here, and we still expect you to comply with them. And if there's another way that we can go about that in the context of home working, here it is, and just take responsibility for that. It's not just the onus is not just on the individual to observe those standards. Firms have to make it easy for them to do that. So
I'm conscious of time, Zoe. Is this I think we could go on all day. We've got so many good questions.
Yes, absolutely. And those questions I'll circulate with the team, and I'll make sure that they do get answered. But thank you very much to all of our panelists. I think it's a great session to start the year off. And, I talked a bit about the objectives that we have at the beginning for the session, and collaboration clearly is more important now more than ever. And so, these sessions, we will continue to do them because clearly there's a need to come together and share best practice. So really looking forward to the rest of the year. And as some of you may know, Kemp Little will soon become part of Deloitte's legal team, so will therefore no longer be able to partner with us and sponsor the network. So I'd like to take this opportunity to thank David, Lucy and Jake for your ongoing support and enthusiasm for the network. Each session, you really put some careful consideration into planning each session with me, and I know I can be a little bit difficult to work with, but it's been an absolute pleasure having you, and I really thank you very much. I mean, you'll be sorely missed.
Yeah, Zoe, we've been honoured to be part of this. We have to. Yeah. Really enjoyed it. We've had fantastic questions and communications, really fantastic sessions. I'm sure it will go from strength to strength. We're sorry we're rolling off this, but we know your plans for the next few sessions. We're going to be in the audience, and we're going to be continuing to support this. We think it's absolutely super, and we're very grateful to have been part of it over the last few years. So we're
going to miss you guys.
Yeah, we'll miss you too. And just to echo everything that David said, it's been a pleasure.
Thank you. Thank you very much. So we'll be launching our new partner in due course, hopefully by our next event, which is taking place in March. So I'll circulate some information around that. We've done rigorous research into finding a partner that can add the same value and input that Kemp Little have given us. So we feel that we've made a right decision. So we'll share that with you very, very soon. But in the meantime, take care, and I look forward to seeing you all again soon in March.
Thank you, everybody.
Thank you.
Thank you.
Thank you. Bye.
Thank you.